Welcome back, YouTube. So I just wanted to do a part two to the video that I made last week, because I know I've been engaging with a lot of people on different social media platforms as far as for what I meant by Bitcoin being the orchestrator of the crypto market, and that the rest of the cryptos will dance to whatever music that Bitcoin plays, whether that's good or bad. And what we're seeing now is a prime example of that. Bitcoin is rallying, and so you see other cryptos like Dogecoin are literally following a very similar path. So I want to touch on a couple things. A, the importance of timing, and B, some of the things that we can expect going forward. So when it comes down to timing, I purchased last week at roughly at around 16 cents. And as we can see now, roughly we've got about a 40% return on those Dogecoin that I purchased last week. And the reason I purchased at 16 cents is anything below 17, I believe, is a really great buy, because remember, historically, that floor or the average as far as for dip is typically about 80–85%. So that puts us in the 14 cents range. So the closer we get to that number historically, the more resistance we're going to have as far as for it to go down further. So it just typically people start buying in at that range because it's about 80% off, and they figure it's pretty easy to make money at that range. Now, this morning, what we saw Dogecoin is still up overall, but we did see like a slight dip. And I wanted to mention that because we'll see more of that as the crypto market turns around, probably at around 50 cents, or as we get to like the 75-cent range, or even $1. I definitely believe we'll have a sell-off. And what I'm saying by that is, typically when you have Dogecoin consolidate at those low numbers and then turn a 40%, give a 40% return within a week, typically you're going to have people take profits. And because stocks or cryptos like Dogecoin, they're a trader's dream, really. I know I mentioned that I like trading Tesla because of the volatility, and the Dogecoin is in a similar pattern as far as the volatility. And so traders, they're typically, you're going to see Dogecoin will ultimately rally like it is now, but you'll see traders take profits when you start seeing these high spikes, or if it consolidates like 17 to 15 cents for like a week straight, and then rallies again and would give like a 40% return in a week, you'll see people take profits. So you'll see like that slight dip, but ultimately usually it's attracting new people, and they'll continue buying to try and push it up. Now, why people don't buy completely at the consolidation points, I don't understand, but everybody has their own investment strategies. That's the importance of timing. This is one of the reasons why I say bring your DCA down. When you see it gets closer to those bottoms, or you start seeing some resistance there, those are the buying points that you want to buy in at, because just on the crypto I bought last week, I'm already at roughly about a 30 to 40% return within a week. And this pretty much sets you up. If it goes down again, of course you can buy in more, or you can take profits. Now, I'll never tell you how to play your Dogecoin or your portfolio. That's completely up to you. But as far as for us creating the floors, the traders, they know the same floors that you do. They also know as far as to take profits if they believe that the market hasn't completely turned around yet, and 40% is good to them. Because think about it, if you put in 10K last week, you would have made at least 3K back within 7 days. So for someone who put in 10K, they got 13K now. They'll say, okay, well, I'll take out my 10 and play the 3. So, and this will happen at all levels when Dogecoin, not just now. So you kind of got to take into effect for that when you start seeing those dips. It doesn't mean that it's crashing, but it means that people are typically selling off and taking profits. As far as for like the history of Dogecoin, this is one of the things that I say always, that when people say Dogecoin is dead or what's going on with Dogecoin, as long as we're seeing Dogecoin react historically like it's supposed to, which is pretty much following Bitcoin's rallies or Bitcoin's declines, everything is completely fine. That is historically accurate. And as long as if Bitcoin rallies, the percentages are going to be different, but as long as Bitcoin rallies and you get a positive reaction out of Dogecoin and other cryptos, then they are perfectly in a line with history. Now, if Bitcoin would have had this rally like it's having now, and Dogecoin would have done nothing, that's when you become concerned. But as of right now, everything is completely normal. And again, that's why I was saying that I would be averaging down last week, and it turns out that would have been an excellent play for return on this week if you're going to trade, or if you just wanted to bring your average down for the long term. Traders are going to take profit probably at several levels, like I mentioned. But if you're long term, by all means, average down. That'll be your best bet. And even if you're short term, obviously averaging down is going to be your best bet, because I believe that we're going to have these spikes, and Dogecoin will be volatile for quite some time. So people are certainly going to take advantage of that, especially when you're close to the historic floor percentages that we typically average in bear markets. That's all I have for now. I just wanted to provide you with that brief update. Please like, share. I appreciate all of you. Let me know in the comments if you purchased any last week and some of the percentages that you're seeing, if you're able to bring down your DCA. Thank you, and until next time.